Debt isn't exactly dinner party conversation, but in Asia, it's a crisis we can't ignore. Right now, trillions are owed, economies are on edge, and finance ministers are sweating bullets. From Mumbai to Shanghai, reckless lending and overspending have pushed much of Asia to the brink. And remember, in a global economy, one region's crisis can quickly become everyone's problem. So let's dive into Asia's debt disaster. 10 countries drowning in numbers they can't pay back, and how it got this bad. Thailand's famous for its beaches and smiles, but its debt problem is no vacation. Government borrowing has become a habit, pushing Thailand's debt-to-GDP ratio to alarming heights. It's not just the government, Thai households are also deep in debt thanks to easy credit and a culture of overspending. As families struggle to repay, they spend less, slowing the economy and making it harder for the government to pay its own bills. It's a vicious cycle, like a financial Jenga game with Thailand teetering on collapse. The country's economic future depends on breaking this cycle before the wrong block gets pulled. Will Thailand find a way out, or is a financial tumble inevitable? China's economic miracle hides a massive debt problem. Think Mount Everest, but made of IOUs. Fueled by a relentless infrastructure boom, local governments have borrowed heavily, often through shadowy, off-the-books deals. Much of this debt is hidden, making it nearly impossible to know how deep the hole goes. Experts warn that if China's debt bubble bursts, the global economy could feel the shockwaves. The world's second-largest economy is balancing growth with risk, but the margin for error is razor-thin. For now, the construction continues, but the cracks are showing. If the bubble pops, it won't just be China cleaning up the mess. The stakes? Nothing less than global financial stability. Pakistan is trapped in a cycle of debt, driven by chronic fiscal deficits and political instability. The government spends far more than it collects, creating a financial chasm that keeps widening. Energy sector mismanagement adds to the chaos, with circular debt causing a domino effect of unpaid bills. Ordinary Pakistanis feel the pain: strained services, rising inflation, and shrinking opportunities. The country's future hinges on breaking this cycle of debt and dysfunction. Without reform, Pakistan's economic struggles will only deepen. India's rapid development comes with a hefty price tag: rising debt. Massive investments in infrastructure and social programs are vital, but persistent budget deficits are piling up. Balancing growth with fiscal responsibility is a constant struggle, especially with a population of over 1.3 billion. Providing essential services strains government finances, making debt management even tougher. India's challenge? Keep the development engine running without running out of financial fuel. The stakes are high for the world's most populous democracy. Sri Lanka's economic meltdown is a cautionary tale of borrowing gone wrong. Ambitious infrastructure projects funded by foreign loans failed to deliver returns, leaving the country drowning in debt. The pandemic crushed tourism, slashing vital foreign income and worsening the crisis. With reserves depleted, Sri Lanka turned to the IMF for a bailout, at the cost of painful austerity. The lesson? Easy money can lead to hard landings. Sri Lanka's recovery depends on tough reforms and rebuilding trust. Laos dreamed of prosperity by building hydroelectric dams, but the plan backfired. Funded mostly by Chinese loans, these projects ran into delays, cost overruns, and environmental issues. The expected economic boom never materialized, leaving Laos with mounting debt and a weakening currency. Heavy reliance on the yuan for repayments has only made things worse. Laos now faces a debt trap, with few easy exits. The country's future depends on finding a way to balance development with financial reality. The Maldives may look like paradise, but its debt crisis is anything but idyllic. Heavy borrowing, much of it from China, has left the tourism-dependent nation vulnerable. The pandemic exposed the risks of relying on a single industry, while climate change adds another layer of financial strain. Rising sea levels threaten the very existence of the Maldives, forcing costly adaptation on top of debt payments. The country is caught between survival and solvency. Can the Maldives stay afloat, or will debt and disaster pull it under? Japan holds the world record for debt to GDP among developed nations, yet crisis has been avoided so far. Decades of low growth, deflation, and an aging population have forced the government to borrow heavily. Most of Japan's debt is held domestically, which has helped stave off disaster. But the sheer scale, over 250% of GDP, remains a ticking time bomb. Japan's challenge is to manage its debt without derailing its economy. The world is watching to see if Japan can keep defying the odds. Malaysia's rising debt is raising eyebrows among economists and credit agencies. Government spending on infrastructure and state-owned enterprises has pushed debt levels higher. Loan guarantees for these enterprises expose the government to even greater risk if defaults occur. Malaysia must walk a fiscal tightrope to avoid slipping into deeper trouble. Mongolia's wealth in copper, coal, and gold has been both a blessing and a curse. When commodity prices fall, government revenues plunge, forcing the country to borrow abroad. Much of Mongolia's debt is in foreign currencies, making repayments harder as the tugrik weakens. The nation's economic fortunes rise and fall with the global commodity market. Diversification and prudent borrowing are Mongolia's best hope for stability. Asia's debt crisis is a high-stakes balancing act with no easy fixes. The consequences, rising costs, strained services, and instability, are already being felt by millions. These nations face tough choices and must commit to sustainable reforms. The world is watching, hoping Asia can defuse its debt time bomb and emerge stronger.